short sellers left. I mean, I don't know why there's this thought that in these markets, which with the liquidity they have, that short sellers who have so little capital can actually destabilize anything. To me, it's at best a solution in search of a problem, but what they actually did research on after the financial crisis, the New York Federal Reserve in 2012 published a study of what the short selling ban did during the financial crisis and in 2011 in Europe, and they found that it actually reduced market liquidity and increased trading costs. So while it had little effect on prices, so it doesn't stem market routes and it hurts liquidity. And I would posit, and this is really based on my understanding of markets and how things work, but it actually reduces appetite. If you ban short selling, it reduces appetite for risk taking on the long side, because in periods such as these, it becomes hard to hold on to long positions if you're going to see all this volatility. So if you feel like you can hedge out some of the beta by going short, then that would, stands to reason you're more likely to hold on to your long positions, at least in full size. So it's been shown empirically to not reduce routes, but to actually reduce liquidity.
And I understand that analysis, Carson. It makes sense that allowing people to hedge positions can continue to permit them to take longs during volatile times. That said, although it's not totally relevant to the current market, would you admit, Carson, when you take short positions, it's not just to hedge long positions, it is because you are wishing and hoping a company goes bust?
So we are directional short seller. Well, actually, you know what? Let me correct myself here. We generally run market neutral. So if we are going to short something, we're usually buying long positions, a basket of long positions that dollar for dollar offset the short position. So every time we're shorting, we're pretty much out there buying something long. But to your point, okay, if we're going to start a short activist campaign, well, yes, we are obviously hoping that the market reprices it. But, our short activist campaigns, and I don't think really the campaigns of any successful short activist, they're not around, they don't center on theses such as, well, we think the future isn't so great because there's more competition coming. It's really, this is a management team that has misled investors or has actually outright lied to investors. Here's the reality. And I don't think market routes or market volatility are really an excuse for management to not be held accountable. I mean, management should be held accountable in any environment. So if we're going to launch a campaign tomorrow, that's because there's a management team that we feel has done something egregiously wrong.
Yeah, I mean, Mike, there's just something, though, about a bad taste of people who profit when the market is tumbling, people are losing their jobs, and the economic pain is spreading, such that the market losses actually make matters worse, even though the pandemic here is really what's causing the economic pain. Where do you come down on this, and what do you think the appetite is in this country for something like that?
I think the emotional response is understandable. Most people, of course, the world is net long stocks, and therefore when markets go down a lot, people are broadly taking losses. But I do see this kind of villainization of short sellers is a stage of every market downturn, essentially people looking for scapegoats, even though this was a comprehensive route. It wasn't as if the heavily shorted stocks went down more. It wasn't really about that. And I don't think you could even point to people piling on the short side, at least not in individual stocks. Honestly, I think what people, if there's any specific thing people are objecting to, it might be the machines that sell index futures in an aggressive way to ride the momentum lower. And that's not really what you can ban. It's really not where the attention goes. So I see it much more as a stage of the panic and sentiment process that always comes out. You have people saying that someone must be at blame for this, and they point to short sellers. It usually is pretty ineffectual and doesn't really reflect what's going on in the markets.
Yeah,
Carson Block, thanks for joining us. We appreciate it. Oh, final thoughts. Sorry, go ahead, Carson.
Yeah, I was going to say, look, I get the emotional component, but nobody's crying for short sellers when we get squeezed in the middle of a 12-year bull market either. So, and look, I guess if there's one final thing that maybe people want to keep in their thoughts, then if they're trying to think logically about this, in addition to the empirical evidence, is, look, we just committed to spending about $2 trillion. If I can have a decent year this year and pay some taxes, that's not the worst thing in the world as far as the U.S. Treasury is concerned.
Carson Block, we appreciate it. Thanks for joining us.
Thanks.